Hello, everybody. My name's Drew Demon, and I'm the Devil Stockbroker. In this video, I'm going to be doing a quick AMC update just to bring everybody up to speed on where we're currently at in the trading and the short interest. So currently on AMC's chart on the daily, we can see that we are hovering just above $5.25 at 5.28 in post-market trading. This puts us at roughly at the pre-split level that AMC was at back in March of 2021. So these were the low points AMC's trading history after January squeeze. So this trading zone has consistently shown to contain a significant level of support, and this seems to be able to be proven by this two-touch pattern that we've seen on AMC's daily chart. Moving down to the 1-hour chart, if we zoom closely, we can see that AMC didn't break this level and in fact put in a slightly higher low 1-hour chart, coming in just a few cents higher. We're still trading down at these levels right now, so we haven't established whether or not this is in fact a higher low just yet. We need to see an actual confirmed bounce before we get that. But it is looking promising so far because we're beginning to see the volume direction candles turning around, peaking back above their fast-moving average. On the daily chart, this same chart for the volume direction candles shows that we are gaining some momentum and we are plateauing just above slow-moving average this level. If we do end up seeing a pop in AMC's price action, this could indicate a bottom in the chart with a very significant level of support right here that we will not expect to return to. And potentially this could be a big pivot point leading to AMC showing a big reversal of trend. For this to play out fully, we need to see a crossover of the 50 and the 200 period simple moving averages for AMC on the daily chart. 1-hour chart, we're still trading in a downtrend, so we need to make sure that this actually establishes this strong level of support here at $5.25 and establish a new higher low, at least up to 150 before continuing back to the upside. If this does end up coming true, then I would anticipate looking for that bottoming formation to appear in the form of either a third bottom or potentially a head and shoulders, rather an inverse head and shoulders pattern. Wanted to go back and take a look at AMC's short interest on Ortex because the Ortex data is showing that there's some interesting increases in the days to cover, as well as short exempts coming in unusually high for AMC. This is somewhat reminiscent from the trading activity that occurred sometime in April back in 2021, which was just when we began to see some volatility from AMC once it had established a new lower low of support after the January squeeze. Over the long-term trend back then, that was actually establishing a higher low, and it ended up forming a double bottom pattern similar to what we just witnessed. That would have been visible back here. This is what the chart looks like just before that January squeeze. The double bottom I'm speaking of is here on this morning star candle. And then again, just here before we actually created a reversal trend and broke out to new highs on May the 13th. We can take a look at that just for a comparison where we're currently trading. This is what that looks like, just a double bottom right here on a lower low. The short interest for AMC is still hovering at around 18.8 or 19% of the free float, which is a significant portion of shares sold short in the market. One of the things driving this is undoubtedly the loss of equity from the APE units. Those are AMC preferred equity shares. If I turn on the free float on loan in yellow and cost to borrow in green, we saw that there was quite a big pop in the cost to borrow recently over the last couple of trading weeks. We saw that decline pretty rapidly. Now we're seeing free float on loan begin to climb again. This doesn't necessarily mean that shorting is happening actively, but it is showing that either market makers, brokers, or institutions of other kinds are increasing their stock of shares available for shorting, either to lend out for derivatives, to sell covered calls, or to lend out to other short sellers to sell into the market. AMC's put call ratio has also been in very rapid decline recently, which is a little bit unusual as well. Typically, a sudden decline in call in the put call ratio indicates bullishness, especially as a stock is declining in its underlying share price, because when you see calls coming in, that indicates that buyers are beginning to prepare to step in, and they are preparing to add to their positions with call contracts in preparation for that move to the upside to give them additional leverage. Now to bring it over to the short exempts. So I've been paying very close attention to AMC short exempt stats, and I've noticed that the short exempts are spiking a little bit more often and with greater volatility than usual. The share price in particular hasn't been particularly volatile, except on a couple of days we had a consistent incline of price uh, back in late November. And on the 1st of December, we saw AMC hit a new high, $9.15, which was a pretty good trading day for AMC, considering that it had closed that previous day at 723. So it was a nice jump, but was otherwise not so significant, except when you look at the short exempt volume, you can easily see there's a bit of an anomaly here where shorts and high volume in general is supplemented by all these short exempts, indicating to me that market makers are using the short exempts in order to supply liquidity to the market in lieu of actual borrowable shares, because the shares are either difficult to locate or unable to be borrowed on that particular day. And then we see 4 trading days later, another spike, and the 5th trading day afterwards, yet another spike. And then suddenly AMC switches back into decline, and then it's closing below $5.50 within a week. Now, one of the things that I harp on about these short exempts is that there's a 6-day window from the time when you see a big spike in short exempts for market makers to cover their failures to locate before they become failures to deliver. So by the 6th day, it is expected for the market maker to have covered their position. It's not necessarily a requirement. There's a lot of games that they can play, but the important thing to note is that if the traded price of a stock is greater, or especially if it's much greater than the trading range on the day where you saw these short exempts, then that means that the price has moved up too quickly for market makers to cover their failures to locate that resulted in the short exempt. So you can kind of use short exempts as a bit of a signal to let you know if market makers are in control or not. If there's a significant amount of short exempts and the price immediately declines shortly after, then they are in control. If you see a large number of short exempts and then a few days later the price begins to move up, they are losing control. And that's a moment when retail investors or institutions, whales, can strike at the price and hit the ask repeatedly, driving the price further and further up. And then once the market maker realizes that they will not be able to close their failures to locate for a profit, then they're forced to become buyers in order to cover their positions, because they do not want to maintain a ongoing long-term short position in the stock in order to maintain their neutrality and hedge against delta risk. To put it really simply, if the price goes up before the market maker can cover these shares, then they've lost control and they're going to have to buy them back quickly in order to maintain a neutral position and keep their risk low. If the price keeps going down like it did during this week, then the market maker covers for profit. That's exactly what we don't want to see, because it just encourages them to keep going. I also wanted to point out the options chain. This is a full options table on AMC that we're looking at that's up to date as of the close of December 16th. And this options chain really, really heavy at $6.50 for next Friday. It's about 0.4% of AMC's total float. So if AMC were to close above this price, that would be quite a lot of calls that end up in the money. But that's really not what I wanted to call out. Actually, what I found particularly interesting was this massive long position of $8 strike, almost 3% of AMC's total float of shares is set to be bought here at 146,765 call contracts. You add a couple of zeros to that, and you end up with 14.67 million shares worth of buying power sitting at the $8 strike level. And these don't expire until January 19th. And I'm just wondering to myself, where did these come from? Because I don't recall seeing these buy orders go through, and I never saw an alert happen on unusual whales. But nevertheless, there's been this massive accumulation of call contracts for the $8 strike expiring January of 2024. To me, this does read bullish. I suppose it's possible that these are just covered calls that are being sold by a majorly short institution. It's possible that they're naked calls that they sold into the market. I don't know who wrote them, but I'm really wondering if the buyer is just a massive glut of retail investors or if it's a very large institution or a collection of institutions that are long on AMC for the long term. It's really hard to tell from looking at this table. It doesn't give us that much context, but at the very least, I'm looking at this very closely with a side eye, wondering what's going to happen if AMC's share price starts to go above $8, and what are the shorts going to do if they end up having to unwind covered and naked call positions that are at that level. And finally, before I close out this video, one thing that I've also taken great notice of is that in the last couple of weeks, there was a great deal of negative media coverage of AMC. It was unusually dense. There's always like the occasional Motley Fool article or something like that that says like, forget about AMC, blah blah blah, go buy our other stock, blah blah blah. And it's like whatever, Motley Fool. We know you're trying to push a product, but whatever. And most people ignore it. But what was really interesting to me is like all these pieces from Investors Observer, Stock News, Seeking Alpha, Jane Street, all kinds of different firms, Wall Street Journal. There's all of these articles on AMC focused on ignoring AMC's growing catalysts and the fact that they've been reducing their debt consistently. This one in particular stuck out to me. This Seeking Alpha article from 2 weeks ago mentions that AMC Entertainment is dropping amid the report of lenders organizing on liquidity concerns. And there was this speculation that there are first and second lien lenders that are working to restructure the company or organizing together in order to basically corner AMC for a debt restructuring deal. The thing is this is not actually happening. This information is 2 years old, but this article was published on the 7th of December. And I want to know why, because this information is so dated. This happened back in October and November of 2020 when AMC was going through the height of the COVID pandemic and they were suffering tremendous losses and taking on more and more debt, selling common stock in order to stay afloat. And this was a desperate time for AMC where their future was really up in the air and it wasn't certain. And obviously, being November of 2020, it was before the squeeze happened, so we had no idea what was actually going to be the outcome for AMC. There was no history for it or for what the power of retail investors could achieve. So this was a big this was a big hit piece on AMC encouraging people to get rid of their shares, and it was super effective. But AMC is not in this situation anymore. So why is this being regurgitated? Where is this information coming from? The author of this article that covered this information is named Joshua Feynman, works for Seeking Alpha, and claims to cover M&A, that's merger and acquisition, special situations, and event-driven news at Seeking Alpha. And he had spent almost 24 years at Bloomberg News. Clearly, he writes a lot of articles for Seeking Alpha, but what is the focus of AMC? And then just a few hours later, after he published his article, AMC responded saying that it's at no risk of an imminent restructuring. Just to prove my point, this is the message. Okay, this was the link to the reorg report. Okay, if you go to the actual article that was published by Joshua Feynman on December the 7th, if you go back to this reorg report and click this link, it will take you to this this tweet that occurred, which quotes another tweet from the same user going back to December 11th, 2020. And you can follow this chain all the way down to try and figure out where this is actually coming from. And there's no citation. There's no citation for this tweet. So where is this information coming from? Like Joshua Feynman, what the hell are you doing? That information is nowhere to be found. So whoever your sources are, especially if this just know nothing Twitter account, what the hell are you doing? This is stock bashing. You're regurgitating false information or dated information that has nothing to do with the present scenario for AMC as a company. And it is driving price pressure to the downside on this stock. So why did you publish this article? And obviously AMC is going to refute this statement because there is no risk of restructuring. They came to a deal back in 2020 after Silver Lake gave them all the money they needed once they cashed in their senior convertible notes after the squeeze had already started. And then later on, AMC was able to dilute shares, and they pulled in a massive amount of cash that gave them all the money they needed in order to survive the duration of 2021. I'm highly skeptical of these statements, and I'm just putting this out there for everybody to be really careful of reading the articles that are published by these major news outlets and online blogs, because a lot of their sources, if you really pay attention, are just thin air. There's no actual substance or credibility to their sources. So be really careful about what you believe and listen to from these random news outlets. And I, just as an aside, I really don't think it's a coincidence that several other writers are just jumping on the bandwagon of saying, don't buy AMC, whatever you do, AMC is not the thing you want. It's going to be diluted. Something bad's going to happen, and it's all just falling apart. This is a repeating message, just going on and on and on and on. So that's going to be it for this video. Just keep an eye out for things. Take note of this bottom formation on AMC. The double bottom is a very strong, very bullish pattern. So all you need to see is for a bounce and maintaining that price level above $5.50. And that would be good enough for me for a buy signal on any kind of a day trade or swing trade for AMC to return back up to $8 and test this resistance zone up here between $8 and $9. I want to wish everybody the best of luck, and I look forward to seeing you in the next one. But until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.